Hi everyone, my name is Evan Rolls, and today I'm going to be walking through my Monte Carlo simulation and capital budgeting analysis for the Hope Medicals case, which is a retail pharmacy deciding whether to expand into online sales. This project let me explore both the strategic and financial sides of a big decision. Should Hope go digital, and is it worth the risk? So, background and problem. Hope Medicals is a well-known local pharmacy chain that's been operating primarily through brick and mortar stores. The owner is considering launching an online pharmacy, basically adding a full digital channel. The big question is whether this shift is financially worth it, given the high setup costs and all the uncertainty around the online demand and logistics. So the methodology, to figure this out, I used a 10-year cash flow forecast and ran a Monte Carlo simulation in Excel. Basically, instead of a one single best guess, I ran 20 different scenarios, each with random variations in growth and cost assumptions. That allowed me to see not just what could happen, but how risky and volatile those outcomes may be. The model assumes an initial investment of about 1.4 million. Growth rates range randomly between roughly 10 and 30% each year, with fixed variable costs changing accordingly. I used a discount rate of about 19% to reflect both inflation and the high risk of entering a new digital market. Each year's cash flow was then projected over 10 years to calculate the NPV for each possible path. Okay, so going into my results, here is what my simulation results pulled. So across all 20 scenarios, the average NPV came out to be about 3.4 million, which is a solid positive return. In the best case scenario, NPV reached about 7.7 million, showing a huge upside potential, but the worst case was a loss about 2 million, meaning there is definitely a risk. The standard deviation was over 3 million, which tells us that the results vary widely. So Hope Medicals could either make a great profit or lose money depending on the market conditions. So how can we interpret these results that I found? So the positive average NPV suggests that the project is financially attractive. It should add value overall. However, the wide range of outcomes means it is risky. Based on my simulations, about 2/3 of the scenarios proved a positive NPV, which is encouraging. The main takeaway is the idea makes financial sense, but Hope Medicals will need strong operational control, marketing, and logistics to make sure that it pays off. So my personal recommendations would be for Hope Medicals to go ahead with the online expansions, but be careful and make sure it's done carefully. So I'd suggest phasing the investment rather than spending all 1.4 million up front. They should also closely track online sales growth, customer adoption, and delivery efficiency in the first 2 years. If those metrics hit what's expected or even excel that, it's worth scaling up. If not, they could pivot early before their loss grows. So to wrap things up, the Monte Carlo simulation really helped visualize both the upside and downside of this project. On average, Hope Medical stands to gain around 3.4 million, but results are sensitive to growth rates and costs. The analysis supports moving forward, just with cautious optimism and close monitoring. Thank you so much for listening. And then here are my references. So yes, thank you.